Welcome to the second episode of IBU EconTalks podcast. Today at our Balkan studio, as a guest, we have our valuable professor, associate professor, Dr. Andrijana Bojadzievska Danevska, a dedicated scholar in the field of management and business with strong research focus and expertise on fintech integration and digital transformation. Likewise, today's episode dives deep into one of the most urgent debates in finance and technology: central bank digital currencies, or commonly known as CBDCs versus cryptocurrencies. So welcome, dear professor.
Thank you, Sani. Thank you for welcoming me today on having this podcast on the differences or similarities between CBDCs and cryptocurrency.
Thank you, Professor. So let's start our conversation on this interesting topic. So briefly, first, our listeners, we would like to hear shortly what are CBDCs or central bank digital currencies, and on the other hand, what are cryptocurrencies, because in generally individuals mix them.
Yeah. So when we discuss about CBDC and the cryptocurrency, first of all, we have to take a look at the historical timeline of evolution of money. So at the beginnings, we have the barter system, and this barter system had the main problem of the need of coincidence of wants. Then, in order to overcome this inefficiency, we have been using the commodity money. So we were using silver, gold, or bronze as a medium of exchange. However, during the 17th century, with the appearance of the first central banks, we started using fiat currency or fiat money that we actually use in the as the medium of exchange. And in that sense, we are efficient in exchanging goods, making transactions, etc. However, with the platformization of the economy, the emergence of the platform economy, we have something new, which is revolutionary. If in the past the revolutionary thing was regarding the commodity money and afterwards the fiat money, now we have the CBDC or additionally the cryptocurrency. So here we are actually at the forefront of new evolution in money. So how can we define from this aspect when we brought the context? The central bank digital currency or CBDC are digital or virtual currency issued by the central bank or the government. So they should act like a virtual analogy or virtual replica of the physical cash that we have, of the banknotes that we use. On the other hand, we have the cryptocurrency, which are at the same virtual currency. However, they are not issued by the central bank or by the government. So they are issued by private institutions. So this is actually the main definition in order for people to understand what are the CBDC and how they differ from cryptocurrency and vice versa.
Okay, and we witness in general this period increasing interest from central banks in issuing
CBDCs.
CBDC, central bank digital currencies.
Yes, there is large interest among central banks, and this is nothing new. So this is something that was occurring in the past 2 or 3 decades. We even have launching of this kind of projects and the usage of CBDC. For example, we have in Nigeria, we have also in Ecuador, etc. However, we also have examples where CBDCs were launched but were halted. So what was the main trigger for CBDC to do this? This can be explained actually by the fact that everything around us is digitalized. And we are surrounded by big techs, fintechs, tech fins that are actually at the core of this platform economy. And in this platform economy, you have digital finance platforms.
Yes, to this digital economy.
Yeah. So we have the digital finance platforms that are actually the main carrier. So if in the industrialization, everything was around the factories, today everything is around this platform economy and this, finance, big tech companies, etc. So why do central banks wanted to initiate this kind of project? In order to adapt to this. So this is one of the main reasons for them to go after a development of virtual currency that will be issued by them. So this is part of their proactive strategy in the future scenario where they will use the advanced technology and furthermore to oppose the privately uncontrolled cryptocurrencies. That is actually one of the main reasons. Also, we can say that one of the reasons for the CBDC to be implemented or adopted or introduced by the central banks is actually for them to be involved in this platform economy, to maintain their role of keeping and maintaining the financial stability.
That's clear. Yeah. And when we are at CBDC, now let's go further on.
Yeah.
And so, from a design perspective, what are the main operational models of CBDCs?
Yeah.
Prof.
So CBDC can be token-based or account-based. So how, given the fact that many young people are very interested in cryptocurrencies, they rarely read about CBDC.
Yes, correct.
But also in the case of the CBDC, we have two models or two designs. That is the token-based and account-based. So how to make a distinction between these two types is that if you imagine that this token-based would be like similar to those of physical cash, while the account-based will be that of having a bank account or a plastic card with which you would withdraw money and make payments. Most importantly is that this token-based CBDC has very similar characteristics of the cryptocurrency in terms that once enters into circulation, it cannot be traceable. So it provides higher anonymity. On the other hand, when it comes to the account-based, it is very much traceable. So because it transfers from one account to another. So in the sense of the token-based, you have to have a digital wallet for which you have peer-to-peer transaction. While in the case of account-based, you will have to have the central bank as an intermediary in between. Here, the interesting thing about the token-based is regarding the traceability and the providing of anonymity.
Since you mentioned that especially young generation are interested in crypto, and generally they mix these terms.
Yeah.
So for that purpose, we brought with you this topic in order to tackle.
To make a distinction.
Yes, and to provide some brief, short explanation, elaboration of this.
Yeah, because CBDC are not cryptocurrency. In many blogs, in many magazines, you will find that when defining the cryptocurrency, they note that CBDC is one type of cryptocurrency. No, CBDC is not a cryptocurrency. So it is a virtual currency issued by the central bank that is actually a replica of the fiat currency of the legal tender that we have. Yeah.
And based pressure on the end users, and on the other hand, based on architecture, what are the two types of CBDCs?
So based on the end users, who is going to use this CBDC, for which audience are intended for which consumers. So we have retail and wholesale CBDC. First, I will briefly explain about the wholesale CBDC, because wholesale CBDC actually refer to what we now have central bank reserves that are used for interbank transfers. And mostly this is not something new, this is not a breakthrough innovation. Because they are already, for example, in the Euro system, we have a target system that already uses this kind of technology in order to make these large volume interbank transfers. The breakthrough innovation here in the introduction of a virtual currency is in the case of the retail central bank digital currency that is intended for businesses, for consumers, for non-financial institutions. So the purpose of this retail is for people to have easier and faster way of transferring money from one account or wallet to another. Regarding the architecture, here it is very interesting because around the world, the central banks, the national governments, look at different architectures for implementing of CBDC. And here actually the question is about the retail CBDC, whether it will be direct, indirect, or hybrid, or synthetic, as they call it. Why is it important? Because in the direct architecture and in the hybrid architecture, there is a threat, and this is already elaborated by the Bank for International Settlements, by International Monetary Fund, and also certain central banks that implemented projects on CBDC discussed about this, that these models actually can disintermediate banks from the financial system. So this is actually a threat for the banks, that this is a threat to the current two-tier banking system that we have. So in the case of the direct architecture, where you have issuance of retail CBDC, what is happening now is that you hold the account as a legal entity or as a person. You hold your account at the central bank. And everything that you do goes through the central bank. So the central bank is the one that operates the retail ledger. And in this case, there is no need for a bank that will facilitate the transfer of money, right?
Right. Since we are here and discussing architecture, let's see, Professor, let's go to crypto. What is the architecture of crypto and how it differs from CBDC's architecture? That you previously mentioned.
Yes. So in the case of CBDC, we have very simple architecture. So here you have permissionless network where you are able to make transactions from one peer to another, and you can do that by not linking to your identity, and still the transactions are visible to all the people on the network. There is no one central authority that regulates or monitors or facilitates the transfers. This is something similar to what the indirect model has, but still it cannot catch up, because still in the indirect model of CBDC, you have banks and you have non-financial institutions like fintechs, but they are payment providers, that persons can hold their retail CBDC not only not in the central bank, but in these institutions. That is similar to our two-tier banking system. So in this ecosystem of indirect architecture, actually, there are more entities involved than now. So it is acknowledged that we are not focusing only on one central authority. Yes, there will be one central authority that will regulate and oversee, but still there will be other players in the ecosystem that will oversee the whole functioning inside. And the synthetic model combines the previous two regarding the CBDC architecture. So when it comes to the cryptocurrency, we have clean slate, so we know what we are dealing with, with here. Yeah.
Professor, since we saw the types of CBDCs, we know that we have a lot of types of crypto.
Yeah.
But shortly, briefly from your side.
Yeah, I will be very brief here, because there are lots of types of cryptocurrency.
The most known, most used types of crypto.
There are different classifications regarding the cryptocurrency. However, here I will focus on the usage side. For example, we have payment cryptocurrency. So here we have the case of the Bitcoin that is used as alternative method of payment, as a medium of exchange, and that actually shocked the world. And
yes, the current news, it is obvious that Bitcoin achieved to surpass Google in the global ranking of the assets.
Yes. Yes, but still here we have to remember that Bitcoin was introduced in order to oppose to the traditional financial system, to be used as medium of exchange.
Yes.
However,
I know like that
yeah.
from Austria, from Vienna, they are promoting Bitcoin like that.
Like medium of exchange.
Yes, in order to replace the role of central banks.
Yeah, the fiat
control,
currency.
yes,
yeah.
correctly.
So, however, we still see that Bitcoin is used as another function of money, as a store of value. So you buy it as an investment and you hold to it and wait for its value to increase. The other type of cryptocurrency that I would like to mention is, for example, the Ethereum, which is a utility token. And it actually serves another function to pay for certain services, etc., to pay for certain functions, etc. And what I would like to mention here are the stable coins, which are actually intended for maintaining stability regarding the cryptocurrency. What does that mean? This means that stable coins are backed up by a fiat currency, a basket of fiat currency, commodities, or even algorithms. So in that sense, given the fact that you are backing up this stable coin with something that is regulated, on knowledge, etc. So you're feeling more safer here, and that's why the value of these stable coins is less volatile. So there are also meme coins and other cryptocurrencies that I would not like to spread here the topic. So there will be another, and we can organize another podcast, yes, where we can discuss
since
about
we started
types.
to tackle the differences, similarities between CBDCs and cryptocurrencies, what you can say a little more on this aspect, for example, Professor? What are other elements that differ? Because, like we said previously, in general, people do not make a clear distinction and do not completely understand these terms.
So when we compare CBDC and cryptocurrency, so it is very important to know what we are comparing, because we mentioned that we have different types of cryptocurrency, we have different types of CBDC. So we can here discuss, for example, of retail CBDC, and we can discuss about payment cryptocurrencies, because the main focus is the CBDC, meaning that the central bank issues money. So in this case, it will issue a virtual currency that will be used as a legal tender, meaning that by a government decree, this fiat currency has its own value. On the other hand,
stable coins as cryptocurrencies we can compare to the wholesale CBDCs, for example.
Stable coins are already used, so they are used in the wholesale market. So here, what we can make a distinction between those two is that they're already there, so they are already used. There is nothing new here, and they are very similar in terms of that they carry a large volume of transactions. So here we do not have so large difference. Even the question is why will we be developing wholesale CBDC if we have something else, like a virtual asset that fulfills the same function? Yeah.
And what about the value formed and maintained at the CBDC? And on the other hand, we have the value formed and maintained in a cryptocurrency. You started to talk a little bit on this aspect.
Yeah. So when it comes to the CBDC, its value actually is derived from the fact that we have a government decree that this will be used as a medium of exchange. So it has a legal tender, and with that, you're actually fulfilling the first function of money. Also, meaning that it is a medium of exchange, officially recognized, so it is used as a unit of account, as a store of value, etc. So the main thing is that is in all other currency that we know, to use euro, dollar, Macedonian dinar, etc. Its value derives from the public trust, from the monetary policy. It actually derives from the economy itself of one nation, right? On the other hand, when it comes to the cryptocurrency, they're issued by private institutions. So they're not backed up by any governmental security, etc. So their value is actually determined on the market. Yes, and on the fiat currencies determined on the foreign exchange market. But here it is determined on the market of supply and demand, depending on investor sentiments, depending on the scarcity of this, the volume of this cryptocurrency, which is limited or unlimited. And most importantly, many academicians, many scholars write that actually this cryptocurrency can be prone to speculation and their value to be actually manipulated. So that's why it's so unstable, it's so volatile. Yeah.
I see. Professor, we know that people are interested a lot to protect their privacy. And on the other hand, many of individuals wants to, for different purposes, want to maintain their anonymity when investing. So in terms of privacy and anonymity, how are they managed in CBDC and on the other hand in cryptocurrencies?
Yeah, so the good thing about cryptocurrency is that they allow you for pseudonymity. So it means that you can remain anonymous. You do not have to have your real name. You have only your wallet address with which you make the transactions, right? So you do not have the sender, the recipient. However, the transaction that you are conducting is publicly available, so it can be seen by everyone. On the other hand, we have the CBDC, which actually requests that it is linked to your identity.
Real identity.
Real identity. And here you cannot guarantee your privacy. That is, you have to comply to your regulations in terms of know your customer rules, in terms of anti-money laundering prevention, etc.
And until now, we tackled a lot of issues, and we saw a lot of things related to CBDCs and crypto. And what we can say, we would like all of us and our listeners to know what is more secure, CBDCs or cryptocurrencies?
In terms of investments? Or?
Of course, in terms of investments in general.
So when it comes to investments, so regarding CBDC, this is something that is totally out of the box thinking. If you imagine in the future that there will be CBDCs issued by the European Central Bank or by the Sveriges Riksbank or by US or by China, so you would like to buy their CBDC and trade. That is actually parallel to what already exists. However, when it comes to the cryptocurrency, the investing in cryptocurrency requires a lot of knowledge. Not only to be digitally literate, but also you have to be financially literate. Why? Because more than 80% of the cryptocurrencies that are already issued are losing their value in short period of time. So this is a fact that should not be underestimated in terms of which cryptocurrency you to invest. So you have to have upfront information, for example, of certain technology development or a service or a system that would require certain type of cryptocurrency. And then for you to invest either in payment cryptocurrency or maybe in utility token or stable coin, which is already used, etc. So the main point is that people have to read a lot and have to be educated. Even webinars, seminars, especially in our country, should be introduced on this topic.
Yes, because there are a lot of, like we can say, pyramidal scheme or something similar that was previously going on in our country. And it was not a cryptocurrency, but unfortunately a lot of people didn't have any kind of information or were adequately literate and fall into that, invested, and in the end they lost money in this platform. So
this is the main problem actually. This is related to the regulation regarding cryptocurrency. So
the absence of regulation.
Absence of regulation, because you don't have regulation, meaning that you do not regulate something that is already happening. People are not aware, and they are easier for manipulation. What's more, they are not protected.
Yes, we will see further on about those issues. And so, in general, for what, since we are here talking about investment in crypto, or you mentioned the how it stands investment regarding CBDCs. So mainly for what are used CBDCs and on the other hand cryptocurrencies?
CBDC, when you think about CBDC, think about the fiat currency that we currently have for making payments, transactions, government disbursements, so for cross-border payments, for everything, for investing also. When it comes to the cryptocurrency, why they are used, for what they are used, here we actually have one different thing than all the rest. So because cryptocurrency, or the payment cryptocurrency that we are discussing, the focus is here, is actually to fulfill all those functions that already the fiat currency has. But here we have another thing that is distinguish cryptocurrency from CBDC in terms of peer-to-peer payments, without intermediary,
without
central
any kind
authority,
control, regulation.
CBDC, the intention of CBDC, first and foremost, for its introducing, was for the people that, for example, are in natural disasters or catastrophic events, to be able easier to withdraw money. So on their phones, on their digital wallets, to be transferred money by the government in order to endure certain difficult time periods. Furthermore, they are programmable, for example, they are traceable. What does it mean they're programmable? So you, as monetary authority, a central bank or the government, even for conducting the fiscal policy, then you are able to program that token how to behave, whether it will have expiration date, or for example, if you have a certain health issue, then your CBDC that you have in your wallet cannot be used for certain items that are bad for you, for example, for your health, or if you have a criminal record, etc. So looking on the positive side of CBDC, so they are they are very interesting for use and for implementation.
On the other hand, we hear usually, and we have a lot of cases, for example, that cryptocurrencies are also used from the actors in the gray economy in order to make transactions, payments, peer-to-peer, like you said, because they are not traceable, not controlled.
Yes, because they allow for
still, there is in a lot of countries absence of regulations.
Yeah, so the main problem here is the regulation. The main problem here is the regulation. However, the Bitcoin, whether the technology that we are discussing about, or the virtual asset, was mainly intended for other purpose. So it was introduced 31st of October 2008 in the peak of the financial crisis, and it was regarded as to oppose the traditional financial system, where there will be no central authority, and everything will be transparent, and everyone can see what transactions are being conducted. So nobody assumed or expected that it will be used like this. Even the author or the group of authors that introduced actually the Bitcoin withdraw themselves when these things started happening, because these things were actually out there, that you can pay with Bitcoin and buying illegal things, etc.
Right. No one assumed that Bitcoin will be, or crypto will be famous or used for this purpose. Like you said, it was developed and promoted from something else.
As it was the internet. Yes.
Correct.
So we changed the purpose of using these revolutionary technologies.
So Professor, let's go a little bit on local perspective, our country, North Macedonia. So in general, where and how we stand in terms of CBDCs development, and on the other hand about cryptocurrencies and what is their current legal status, even though we mentioned that there is an in general absence of regulation frameworks.
In North Macedonia, so we have the intent and the effectively educating of the central bank of Macedonian people in terms of being financially literate. And here we can find that there are intentions for educating them on cryptocurrencies, giving advices, etc. However, when it comes to the CBDC, according to the latest information, was that the central bank is actually in developing a feasibility study on CBDC that will be a replica or digital dinar that will do in cooperation with the World Bank. So the intention of this feasibility study, as all other cases, is to examine the feasibility of implementation of such digital dinar, what will be the impact of the financial stability of the monetary policies, what will be the technical infrastructure behind it, who will be included in that ecosystem. So we will see how that will evolve and what will be published as a feasibility study from this.
But we see that there are certain developments.
Yes,
in
so
this direction.
Things are moving.
That's good.
Yes, yes.
And what about the widespread use and trading of cryptocurrency now among our citizens, especially we said youth generation, and in mostly how they use the digital assets?
So
what are the most using these digital assets among our citizens?
Yeah. So because we do not have legal framework that will actually regulate the part of cryptocurrencies, so we do not have standardized information, so we do not have where to collect data from in order to determine this. However, according to certain estimation, is that around 30,000 people in our country use or trade with cryptocurrencies. According to one research conducted in 2022 of Professor Levkov with other two co-authors, found that 80% of the people who trade with cryptocurrencies were actually male. And they were on the age from 19 to 34 years old, so in the youth group.
Period.
And these people were actually with higher education, and they were living in urban areas. So this was actually the profile, the profile of the people in Macedonia who...
Of an average.
Yes, on average.
Crypto trader.
Yeah, a crypto trader in our country, how it would look like. However, a very interesting fact was that around 2/3 of those who trade, who buy, sell, etc., were actually keeping the cryptocurrency. So they were keeping in hope for increase in their value. Yes. So it's like passive investment.
So in a sense, this is mainly as a joke. In a sense, for that we have a lot of young millionaires.
Yes.
In our country.
Yes.
But this is interesting to hear.
Yes.
We see young people investing, and on the other hand, they are highly educated.
Yes.
With higher education.
Yeah.
Interesting fact, Professor.
Yeah.
And what about other countries, for example, European countries and beyond? We see some pilot projects, development strategies going on regarding here CBDCs.
Yes.
What our country, North Macedonia, since it is in the very beginning, what can learn?
What can we learn? So,
and if you can provide us any kind of real examples.
So as of February 2024, 3 countries were already using CBDC, such as Nigeria, for example, or Bahamas. We have here the Bahamian Sun dollar, which is actually in the first one, even though Ecuador was, but it stopped it. We also have other countries that initiated the pilot project, made the feasibility study, made the pilot project, and disseminated the CBDC. However, they halted at what point they stopped. For example, the Sweden, the Sveriges Riksbank. Why? Because, as I mentioned at the beginning, So we are jeopardizing the position of banks in terms of disintermediating them. Even though they have the indirect model, keeping the two-tier current system, still there is a threat to this system, which, according to the government, to the central banks, this should not be allowed because we are not ready for that.
As we are heading, Professor, to the end of this episode, shortly, can CBDCs and crypto coexist? How widely the adoption of CBDCs can impact the relevance of cryptocurrencies?
They already, cryptocurrencies exist with the fiat currency that we have. So now is the time for the fiat currency to be actually to be considered the CBDC as a digital extension of the fiat currency that we have. So if we look from that perspective, we can see that this is already happening. And there is one author who writes about this, Cohen, in his book Future of Money, that actually explains that in the future, so that future is not very far away, it is near future, we will have a diversity of money, forms of money that we are going to use, forms of medium exchanges that we are going to use. And the central banks actually here are the ones who want to keep the pace. Because we have...
And they lack eventually. Evidently they lack.
Yes,
they
but...
lack behind, in a sense.
Yes, because they are the ones that are responsible for overseeing and maintaining the financial stability. They keep the trust, they keep the confidence in the system that actually carries out throughout the years, right? So they have to be very careful in how they do that. But the question is, for example, maybe to what extent will this diversity be in the forms of money that we are going to use? Who would prevail? If you ask me, I think that stable coins, that will be actually like a transfer coming from the fiat currency to the cryptocurrency. Or here I would also mention the CBDC as pure virtual asset that can be used as a medium of exchange, and that would actually replace the euro or the dollar that we have. So it will be digital euro, digital dollar, as we have in China, digital yuan, etc.
Like we said in the beginning, the purpose of these episode was to provide better understanding of these terms CBDCs and crypto, and try to prevent with giving proper adequate information to the citizens, the listeners, for CBDCs and cryptocurrencies. So in the end, I would like to conclude with a question regarding what advices and suggestions you, as professor, as an expert on this field, you can give to our citizens, especially, like we said, interest we have at youth generation. What advices and suggestions? So when they decide to use digital assets in our country.
Yeah, so first and foremost, even though we do not have a legal framework that focuses on cryptocurrency, we have other laws that actually regulate part of it in terms of owning a virtual asset. So in the prevention of money laundering, you can own a virtual asset. Nobody forbids you that. But what you have to do if you trade with it and you have a certain profit or capital gain from out of it, you have to report it and you have to pay taxes on it. This is part of the personal income tax law. So we have certain guidelines, but we are not very clear where we stand. So it's not legal, it's not illegal. So we are somewhere in between, and that's why when you don't know which path to go, you try to improvise, and you are a victim of frauds,
and you are vulnerable to risks.
Yes, you're more vulnerable to risks. So if this is regulated, that everything will be safer and easier. This is the first part. So when you're deciding, so you have to be aware that this thing exists. On the other hand, if students, youth, whomever wants to invest in cryptocurrencies, they have to educate themselves. But as I mentioned previously, not only digitally, but also financially.
So here universities plays a crucial role in educating the younger generation. So thank you, Professor, for your contribution on tackling this contemporary topic that highly interests citizens, and especially younger generation. So here I would like to thank you for your attention and see you on the next episode when we will come up with the next contemporary topic that we'll tackle with another guest.